All right, I see people popped up, so let's get it started, guys. Today, like, hey, from Austin, Texas. This is Andy from Overnight Finance. I'm your host today, and I'm absolutely thrilled to see these two wonderful faces. Today we have Max Ermilov on the call. Max is the CEO of Overnight Finance and has been in the industry for quite a bit of time. He's super experienced in finance and has been like 17 years in BCG, leading the practice for financial institutions. Like, I think, Max, you were the managing partner for BCG for the financial institutions. We're also and absolutely warm welcome to Cassandra. Cassandra is the cryptographer and software engineer. He has worked with a number of startups, well, on cryptographic technologies, including threshold encryption, multi-party computation, smart contract design, and development. Cassandra is a co-founder and tech lead at Arrakis Finance. Hello, guys.
Thanks. Hey, thanks so much for having me.
Absolutely, this is such a huge pleasure. I'm just kicking it off, and I'll give the mic to Max. I just want to remind everyone that today's stream, we're going to take your questions, guys. So please provide your questions, and we will reward three questions with $10 each, just for the best questions which we like. Just leave them in Telegram, leave them in Discord, leave them in our Twitter as a message, and we'll be happy to answer all of them. All right, Max, take it away.
Yeah. Well, again, thanks, Cassandra, for joining. I wanted to give a brief kind of idea of how this MS session came about. And when you first appeared, I think it was early April. Said as always at the very beginning, very very interesting. And we spotted your offering, started looking at your technology, and realized it was very very interesting for us. But we were, of course, concerned. What is Arrakis? So there's like this new company popping out, and they're offering good yields, and like who is behind it, and etc. And so I got in touch with you guys and met you in Amsterdam during ETH Amsterdam, and was very impressed. It turns out, the team is so experienced and so famous, and the technology behind it is so bulletproof and so like tested, and like it's like really the industry standard. So maybe I thought we kick it off by you explaining, what is Arrakis, what is the idea behind Arrakis, and how do you guys see developing forward?
Totally. Yeah. So Arrakis was born actually out of Gelato. So I was a developer at Gelato Network. And there we work on automation of smart contracts across a lot of different ideas and disciplines. So anything you might need automated on the blockchain, from just normal DevOps, some protocols every week they have to harvest something, this kind of thing, to much more advanced DeFi kind of applications where maybe we'll whatever refinance a loan for you if the loan is in a risky position, and other interesting integrations we've done across DeFi. And about a year ago, right when Uniswap v3 was coming out, as a Gelato developer, my task was to look at Uniswap v3 and see where it might need some automation, or where it might be useful, where Gelato Network could be building things on top to make it more streamlined. And at first, this was supposed to be a smaller project, but in doing the research, we realized that it's quite interesting, right? Because this was only the white paper of Uniswap v3 existed at this time. But of course, this new concentrated liquidity paradigm meant that liquidity provision would change drastically from the way it's normally perceived among the DeFi crypto community up until this release, right? There was Uniswap v2 and many, many forks and a lot of things all following very similar paradigms, where liquidity providers all put their liquidity in one place in one way, and they all earn together somehow, earn fees and take on impermanent loss together. But Uniswap v3 made it possible for liquidity providers to express their preferences directly. And so all of a sudden you have this problem of who is going to manage this liquidity, how will people know exactly the preferences that they should, and of course now liquidity providers are competing against each other as opposed to all being the same. Now you get a more sophisticated market making landscape that we simply never had before in DeFi. And the question was how to maintain this exciting anybody can LP. You don't need too much special skills. You just need to have the assets and be able to earn yield. So maintain that while still working on this more advanced decentralized exchange. And this is how what is now known as Arrakis was born. And so we were building on top of we were known as Guni for a little while at the beginning in beta, and we built this project, which is a simple fungible wrapper around a Uniswap v3 position, which makes it possible for everyone to provide assets to the Uniswap v3 market, but in such a way that the choice, the range selection, and rebalancing of the ranges to earn fees in Uniswap v3 is abstracted away from anyone who's just providing assets. And you can simply provide your assets to the pool, and the pool will be automatically managed in the background. So this was the seedling of Arrakis Finance, and I think what we saw there and where we're headed is that in general, liquidity provision is only going to continue to get more complex, get more mature, like it is in traditional finance, and thus it won't be too simple to be a market maker, to be a liquidity provider. It will involve these specialized skills, but projects and individual participants who want to make earn yield liquidity providing will still want access to simple and highly composable ways to access this Uni v3 liquidity provision market, but with all the headache and the difficulties and the professionalized market making abstracted away. And so eventually we see this is not just on top of Uniswap v3, but Arrakis is a kind of liquidity layer wherein tokens that are looking to bootstrap liquidity across the DeFi landscape, even eventually across networks, will be able to come to us sort of as a one-stop shop and say, okay, this is the kind of liquidity I'd like to provide, and have these vaults where liquidity will dynamically be deployed across dexes, across networks, to make sure that that your token has the kind of liquidity that you're looking for. Of course, it may also involve the project needing to provide some sorts of incentives on top, but that Arrakis will be this one-stop shop to be able to do this with a kind of like an abstraction layer, an aggregation layer, much like 1inch is for trading on dexes, but for the other side, for LPing.
Yeah, that's very cool vision. I think we experienced it like firsthand. We tried connecting with Uniswap v3 and out of our protocol doing kind of direct liquidity provision. And I think it took us like 2-3 weeks to integrate that. And I'm still not happy with the mess. With you, it was like 2 days and everything was working. And it was so cool. So I think I honestly believe we were kind of among the very first, or maybe even the first project to integrate your protocol into our protocol for liquidity provision. And that's why we got so excited. But then before we say that, I mean, one of the things which impressed me the most, there are so many people who tried approaching this task of kind of taking the NFT of Uniswap v3 and packaging that into ERC20, making it composable. And so many people have failed and you have not. How come?
This is a great question. And of course, you don't always know the answer completely, right? There's might be some elements of simple luck and timing. But I think one thing that we did very differently than our competitors was actually focus most chiefly on the composability aspect, the ease of use, the ease of integration, and making it as much like Uniswap v2 type patterns as possible. And so we were really focused on finding ways to make it useful for liquidity mining, make it useful as a collateral type, and make it easy to onboard for these different things and across the DeFi landscape. the harder problem, the truth is, the very, very difficult problem that everyone is still bashing their head against, including us in Uniswap v3, is how to optimize liquidity provision, right? This science of setting ranges and when to rebalance them and why and how to squeeze as much fee capture as you can is quite complex, right? We have just in time liquidity, which is people using like MEV just to, in one block, when there's a big trade, get the fees and go out exactly because they're afraid of the impermanent loss and they don't want to have to manage. But when you have these longer, more perpetual positions, how are you going to manage them? Why, if they are highly concentrated, how can you mitigate impermanent loss in a way that is foolproof, even when market conditions are always changing? All of these questions extremely difficult, and we basically avoided focusing on this by making it creating a platform wherein anyone could manage these positions, and our role is basically our fungible wrapper is very flexible but non-opinionated, and we didn't focus on the optimal management strategy, which is actually what I think is the difficult question here. But I think a lot of projects potentially just jumped into that, like let's try some strategies. And the issue is that making sure that you can make a return or protect the LPs from super aggressive and permanent loss is extremely difficult here, and that problem was very complex. So we saw a lot of competitors, I think, approach this, and some do well, some do not well at all. But basically, that is a very, very difficult problem, and we realized that even without perfect optimization of the LP, if you simply make it very easy and composable, and you instruct your partners also to keep these conservative positions and be open to, okay, we're not trying to just have the tightest positions rebalancing all the time to get the most fees, but have more sustainable positions and just those that can be composed more easily. And this worked very well for us in the end, because a lot of our partners are happy to have mostly static positions, which are rebalanced in a more ad hoc way, um, and are pretty safe and conservative, wide liquidity positions, as opposed to super, super concentrated, which might give you more fees. It's much more complex. And in the end, a lot of partners were very okay with this because it still, improved their capital efficiency over Uniswap v2, allowed them to access the Uniswap v3 market and do all the things they want to do on top in an easy way. And yes, it's not as optimized as it could and will be in the future, but we're getting there. And in the end, people saw the benefit here, and I think that's why we're still alive.
Yeah. I think that's a very, very smart approach, because it's like your solution essentially is for passive investors, as opposed to high frequency traders. And here you have targeted like a very specific, like you said that you've targeted like smart liquidity providers, make LP accessible for all, and that by definition means not for professional traders, but for the general public. Do you think this high frequency LPing, which is like high frequency trading in a sense, can be solved on chain? Or is this kind of the aspect of Uniswap v3 which is inherently, better to be done off chain?
Great question. I think we're still figuring it out. I think that there's definitely, we're always right, there are some things we can do off chain that we cannot do off chain. How helpful are they, or how far can we get on chain, is still a bit unknown. I think what we're looking into and are very excited about is these hedged vault products. So one way to be able to have more optimized LPing that still doesn't have to be that that you have this machine learning predictor off chain which is helping you predict prices in order to make sure how to rebalance, but is actually more just integrating other DeFi primitives so that your position is hedged as the price moves anyway. And so then you can rebalance, but because you have some hedge, because you have some insurance, you know that when you rebalance, you won't be taking aggressive losses because of the impermanent loss. And so avenues like this might make it possible to still do like more high frequency, right? Constantly rebalancing the position,
Yeah.
but in such a way that is fully on chain and fully transparent, and not because you have some really cool algorithm where you're analyzing the sentiment, of the market somewhere else. So
that's exactly, sorry, the hedged walls, or like hedged positions, is actually something we got the most excited, to be honest, because we quickly integrated USDC, USDT, Vault. I mean, that's what everybody thinks. And we should talk about this because I guess until recently, this feeling was those vaults have no, like those LPs have no impermanent loss, but we recently last week learned that they do. And so that's something which we should talk about. But like the idea that your product makes possible another product, like it actually makes possible many other products like USD Plus or similar strategies, where like USD Plus would only invest in stables because we are super conservative. Our product would just yield, and we do not allow losses or even on 1 day horizon. So any investment should be at least zero every day, even in situations like last week. But what we got really excited to explore is like what we call this USDC neutral strategies with your product, where like even USDC USDT, where you hedge USDT, and that proved very very useful last week actually. You hedge USDT by borrowing it on another element of infrastructure, then you're hedged. Then you only have the impermanent loss risk, and you can do the same with DTH USDC. You can do the same with BTC. Actually, one of the best pairs, which we believe is going to work like that, to provide very stable USDC yield, is Bitcoin ETH pair, because that's actually one of the most stable pairs and one of the easiest to hedge. And so, actually, using your product, it's so easy to build something which actually allows for those strategies. So I'm really excited that we are working on something like this, and hope to actually deploy and show you some of the very first things which we have in mind over there.
Awesome. So exciting.
What do you think? What did you experience last week? Because like this UST thing, now everybody knows that everybody knew, and and like, but I think there were some learnings. The important thing when things like this happen is not to say I knew it, but to say what do we learn?
Yeah.
And you were at the forefront of those things. What did we learn last week?
Yeah, man, I think we learned many, right, in crypto in general, many things, right, and many of them more. I think whenever in these big cycles we have, when the unraveling finally happens, all of a sudden you're in a new place in a day, and you realize you have many realizations about kind of the macro of the space in general, right? What was real and what was hype on top, and you see this each cycle. And so, in general, lots of different things, right? So just to touch on that general, the previous cycle had these ICOs, and this is an interesting technology that can certainly be used for people to fund something. But of course, on the back of that came an explosion of speculation on a bunch of ICOs that are kind of were fluff. And then, in one day to the next, at the beginning of 2018, this unraveled, and everyone had that wake up and said, "Oh yeah, of course, some of these ICOs, right, were never going to happen." And I don't really know what it was about. And I think you see some of this with, you know, I'm recapitulating things everyone has heard over the last few days, but with the alternative layer ones that are sacrificing a bit on decentralization and security, and certain DeFi paradigms that are like obviously kind of self-eating and useful for inflating token prices in a bull market, but not necessarily sustainable beyond that. And so we definitely saw all of this, but in terms of LPing in the market, I think one thing that was quite interesting, right, is we take this very conservative approach at Arrakis when we set these initial ranges, and so we had very wide ranges, and a bunch of the LPs, mostly, if anybody was unhappy about sort of the range selection, it was usually on like, why are we so wide? We're not getting the right fee capture. And all of a sudden, overnight, people were petitioning to please go wider because of course the things that were not expected but still plausible did happen, right? The major unwinding, and prices do move, and then you get used to new price levels pretty quickly. And this is very important. Yeah, I think so it sort of I think validated a little bit of our thesis of being highly conservative. And for instance, we use a Monte Carlo method to set the positions whenever we do. Here we use the basically targeted a 95% chance to stay in range for the full 3 months of slated liquidity provision. And even there, actually, one or two positions did escape the range during this downturn. So we were in that 5% already. And so it shows that, like, I think this conservative approach is quite useful. And also, we
Mm.
had to then it was our first with these newer positions, the ones that are incentivized with Matic, and a lot of money had flowed in and hadn't moved yet ever. Our first time actually having to adjust the positions. And so there we got a number of learnings about the ways to do this in such a way that's the most neutral to everybody, right? Because we're servicing both Polygon and the LPs, right? Polygon is incentivizing this, and thus Polygon has certain desires of, they want deep liquidity wherever the prices are. The LPs want to avoid impermanent loss. And so finding a middle ground which is neutral and holds up for everybody, that of how Arrakis can continue to manage these positions, we definitely had a number of learnings there.
Yeah, yeah. I think that's what we noticed is that we are invested across a number of protocols, and we try to be extremely conservative, but still in this paradigm, at least I found that Arrakis was very helpful. When we got the most scared was actually not with UST. When we got the most scared was with Tether, with USDT, to be fully honest. That was so scary. Oh, I can't believe it. Because that's like really the it's not scary when you take risk, it's risky and you're kind of prepared. When you take risk and that's when you think you're not taking risk and that becomes risky, that's actually when it's horrible.
Max,
What's your takeaway on how best to LP the USDC-USDT pair? I think for general public, that's the most attractive one, and that's where people feel the safest. How can they feel safe with Arrakis more than with anyone else?
Yeah, that's a great question. I think with stable coins, and this is where we really started, because this is where Arrakis could shine, right? We didn't want to focus on the range optimization problem, extremely difficult, cool problem for everyone who's working on it. Yes, keep working on it. We are too, but we see the difficulties there. And so one of the reasons we love the stablecoin pairs is you can easily create a vault that everybody can agree that they want to be inside that vault that never needs to rebalance, because you have this correlation, right? As long as you and I both agree that these two coins will not depeg in the long run or in the medium run, or as long as I want to LP, then I know exactly where I want to place my liquidity, and we all agree really close around the $1 equals $1, right? One tether equals one USDC. And so this has been our very, very simple approach with all of these. We started with DAI USDC on mainnet, and we have a collateral type with MakerDAO of DAI USDC. And this is like our biggest TVL pair, because you can borrow DAI, you can use your DAI USDC LP as collateral and borrow DAI and go leverage into this pool. And it's very, very low risk, assuming you believe no depeg of DAI or USDC. And so I think just this framing is very, very important, right? For instance, we do have this USDC, USDT vault. And this vault has spent some time over the last few days, definitely out of range, but we have not rebalanced it. And the reason is because we believe that our LPs want to provide liquidity when USDC and USDT are pegged to each other. And any rebalancing, any chasing of prices here is going to hurt you more than it's going to help you in the medium term, if you have this medium or longer term outlook, right? Maybe if you're super short term, yes, whichever tick it's trading in, even if it's off the exact price, you could throw all your liquidity in there. But this will only work for, in this more kind of short term, very, very short go in and go out approach. And so with this vault, the way I see it is I would be in there for the Matic incentives. more than the fee capture, right? And so even if it's out of range, for me, it's no sweat as long as my thesis is that Tether isn't actually depegging, right? And if you believe it is depegging, yeah, you gotta. I would say I would recommend you to get the heck out of there, basically, because you'd be mostly in Tether or all in Tether over the last few days. Either 80% to 100% in Tether, this vault has been, because Tether has been wobbling a little bit, but yeah, I would. This is would be my approach. It's basically you have to maintain your thesis, but it's much simpler, right? Impermanence loss doesn't matter except for this question: do I believe a depegging is happening or not? And if so, change your approach. If not, continue to earn the rewards and wait for some ARB to happen and start earning fees again.
Yeah, I totally agree. I mean, when UST was depegging, that's one thing. Tether is a totally different story. I mean, there is all the speculation that they don't disclose their reserves, but I mean, we know that they do exchange against fiat. We know that they do have reserves. We know that and Binance and FTX and many great exchanges cannot live without them. So there is no way those guys don't get saved, as opposed to purely uncollateralized algorithmic stablecoin. So at that point in time, actually, the fear of depegging was irrational. I think it was,
Yeah.
honestly, everybody was it was going crazy. But that actually was the moment when the impermanent loss appeared in the pair, where nobody expected that to appear. And that's where I found Arrakis being so cool, just because that's actually uh, not this was not the reason why we chose Arrakis, but that's actually protected us from this impermanent loss, which was appearing at that point in time, because you had the range. Of course, some impermanent loss, but I mean, still protected us from the impermanent much greater scale, which could have been. So really, that was very helpful, and we found this feature, extremely useful. So heads up, or like heads off for your product and what you are doing. Um,
I have a
Before we pass over to
Max,
community,
Max. I have a
uh,
question actually to both of you. And I think it relates to the topic of our conversation about UST. Well, the recent events are really heartbroken, and I just wanted to to express my that I'm really sorry for everyone who lost money. There are a ton of people who lost money, and not because probably like well, probably because the state of the industry is at the point where people are not educated enough, so they just bring their funds there. So my question to you guys is, well, what would you see as a right move for us as industry leaders to not allow such things to happen? Because it's just one of the largest and the most known events in the industry. Previously there were just a bunch of them, like there was Titano, right? And like a bunch of others, just to name a
And
few.
yeah.
Yeah, and it's happening and happening again, and it obviously prevents people from just diving into this industry and just trusting us as kind of a crypto project, right? So what would you recommend to do in order for these things to not happen again? I know it's a very complex question, but
Of course.
any initial thoughts? What would you just recommend people doing not to like fall into such stories as UST?
Yeah, I mean, I think that yes, there's certainly complex parts of this topic, right? Will algorithmic stablecoins continue and why, right? And what are the incentives for the projects to create these unsustainable algorithmic stablecoins, right? So there's a lot of complexities there. But I think on the simple side, for me, it's really what I've been focusing on with Arrakis at least is as much transparency as possible, right? This is huge and simple, um, as opposed to, right, you need to be the false advertising has to be your enemy, because it will come back to haunt you eventually, right? And this is all in the end. There's a simple story about UST, right, which is advertising extremely high unsustainable yields in such and doing it very very well, such that they were able to scale up to billions and billions of dollars, And that's when the unsustainability finally peeks its head out. And because it scaled so high because of this great advertising technique, and some of how the mechanism worked kind of allowed it to do that scaling at the beginning very easily, we got in this situation. And so to me, it's all just about transparency and focusing on like um, the long term of the project and where it is now, and like keeping realism in the minds of the users, and leaving everything as kind of like, here is where you can find the exact information about about what processes go on here. It might be complex, right? Uniswap v3 is like so complex, and it's really been hard to figure out how to educate the user about it. But at the very least, it's like having some approach wherein you need to do your research, and these are the things that you can learn to figure out exactly what we're doing here, and that being somehow like on the front page, as opposed to the only thing on the front page is, here is where you can make the best yield of all time, and everything else very opaque about the how, right? You don't want them to ask that question. I feel like I want to create a community and ecosystem where they want to ask the questions about, was this audited, and how do I know, like, how are these being rebalanced, right? A lot of people have these questions. For us in Arrakis, is a great question, right? what what are the procedures, and who ultimately has control of where the liquidity is deployed in Uniswap v3? And I want them to be asking these questions, and whether we can give perfect answers, or we have to point them to complicated stuff, or we can't even give an answer yet, at the very least, that kind of approach is the first basic thing one can do, right?
Got it. Thank you, Max. What's your take?
Yeah, I totally agree with Cassandra. Is transparency, and actually making people aware that if something is intransparent, maybe stay away from things. But beyond that, I want to share a few observations. It's really, USM, Neutrino, Depact, like it's exactly same model as UST. Depact, like 1 month before that, everybody talked, oh, USM waves, oh, Neutrino waves, all this. It Depact. But nobody thought it would be the same with UST. Like the general public didn't take notice. I mean, it's a little bit strange. I think we really need to kind of make people aware. And, it has just become so profitable to run these algorithmic stablecoins. And people don't think it will spread elsewhere. I think as an industry, we just need to take a bigger stance on, I hate the word regulation, but if we don't self-regulate, if we don't find a way to educate the public a little more, we get regulated. Like that's what these regulators are talking about. They didn't understand stable coins. They still don't understand them. The regulators of the world, they all focused on what they saw. They focused on USDT and USDC, which are comparing to UST is very reliable still. And, comparing to DAI, still okay. I mean, DAI is very reliable. And, so they focus on things they know, and things they don't understand, they didn't focus. But they should have focused on the on the algorithmics. What I find the most amazing is, like, Tron recently launched an algorithmic stablecoin, and it's like it's already growing like crazy, and people are not learning the lesson. So I'm just thinking, because everybody wants to be the first into the pyramid, and then everybody thinks they're smarter than everyone else. All children are better than average, and so they all hope to be the first out, and so they're not learning. So I think this, do your own research, but also kind of propagating the word that not everybody is above average, and typically people who launch those projects know better, and so just be careful about these things.
And this is that complicated topic, I think. Exactly. There's too much incentive. The issue and why it's not quite going away is because there's too much incentive for the algorithmic stablecoin creator, issuer, because instead of like other fully backed stable coins, which simply you need to put at least $1 in to be able to mint $1 and use it, well, they can print money for less than, they can print dollars for less than a dollar. And who doesn't, who what creator of a stable coin, right? This is enticing to many, no matter what, right? They can create free money and start using it. And so we will continue to see it. I think exactly what you say, potentially, like a rebranding of algorithmic stablecoin. Maybe it needs another name, right? It's not necessarily a stablecoin. It's like
Yeah.
now.
That's such a great point, because they actually they damage the image of stablecoin, right? Because it's something that they can't use. It's not a stablecoin, right? By the way, the news of the last hours as we speak, day has lost its peg to the dollar and is down 33% in the last 24
They
hours.
like DEI, right? DEI from
DEI,
Phantom.
yeah, yeah, DEI. I think it's MakerDAO. Yeah,
No, that cannot be. No, J, like the
DEI,
Phantom one.
DEI.
Yeah, that's Phantom. That's the algorithm called
It's
Phantom.
different. Yeah. It's not
Yeah, man, come on.
DEI.
You're gonna provoke a panic, Andy. No, just be
D
careful.
DEI, DEI.
Yeah, that one I was very skeptical about, and yeah. Anyway, so I think those are very. But I also wanted to share another point. All these algorithmics, take fiat currencies.
Exactly.
Yeah, I mean this algorithmics, and do your own research on the governance and things like that. That's extremely extreme. So I probably won't continue this. But I mean, it's not. It's like you look at the emerging markets; they all devalue from time to time. They all go through kind of hyperinflation from time to time. That's the nature of the financial systems. It's just that's how it is.
We've got a
Unfortunately.
we've got a question from Twitter Spaces. Someone requested. Um let's just let
Sure.
someone in. Um, hey Chan, I hold on. Chan is connecting. Hey Chan.
Okay,
Hey,
hello.
yeah. Feel free to ask a
Hey,
question. How's it going, man?
okay. I want to ask a question about your token. Can you tell us more information about space token?
Yes, sure.
What is the function? What is the function and use case in your ecosystem? And
Yes.
where can I buy a space token?
Perfect. Yeah. All of this. Happy to answer. So, first of all, Spice Token not yet released. So, it's still in the process. So, to give a tiny history, right, we were this project on top of Gelato known as GUni, like one in house Gelato project. As we grew and we realized it was pretty different than general purpose automation, which is all infrastructure, this is really a DeFi application that just uses the automation in the background, like many other DeFi applications. And so, as it grew enough, we realized this was its own project with its own concerns, and we decided to attempt to break it off into its own project. The first step of this was to get the blessing of the Gelato DAO, since Gelato was really the owner of this, to be able to create this new token. And how would gel holders who have who are the backers of Gelato be incentivized in some way with this new Spice token, and not just have like a new token take all the value from a protocol that they paid to develop the beginning of. And so that's why there's a lot known already about the Spice token, because in order to get Gelato to agree, and we had a vote in the Gelato DAO that sort of officially made it possible that yes, we can do this Spice token, and the Spice token will a certain percentage will go to the gel holders pro rata. And so this is what's known already about the Spice token. But it does not exist yet, first of all. And there are a number of things about the model that are still being ironed out, especially as the market also continues to change. I think we want to adapt and be like have this token be forward looking, as opposed to being something that's like part of the past or past models. Keep learning from the things that are emerging inside the space. But generally, to put it super briefly, I would imagine an analog, though there are a number of differences, would be like the CRV token. So it's
The V model.
a curve-like model, though it's not quite VE. Already there's some differences, and we're not even using the VE terminology. We're calling the it X Spice, as opposed the like locked spice, but a similar idea where you the spice is an inflating token over the future. As it inflates, this inflation will be distributed to LPs who are LPing in the vaults. So there will be gauges. The inflation gets distributed to the LPs in the gauges. And if you get the spice token, you'll be able to do something kind of like you can do with VE, though quite different, right? So it's not a 4-year lockup and linear decreasing. We have a different model here, but a similar idea where you the more time committed you are to the token, the more voting power you have over how the DAO is governed. And there similarly, there will be a certain amount of protocol revenue that goes to these X spice holders, these locked spice holders. So we have these. The general idea is Arrakis is this liquidity platform. We help manage.
Everyone is so interested in these days. Are you thinking of some partnership with like some like who? What's gonna will there be a convex equivalent to what convex is to Curve? Will there be convex to Arrakis?
Yeah, it's an interesting question. I think our biggest hope, right? I think one learning with Curve is that it's not necessarily desirable, not to comment or say what they should be doing or anything, but it's not necessarily but desirable to have just a single convex actor who becomes kind of, on a meta level, the sole controller of your governance. So our hope, everything we're doing in the different ways that we're tweaking the model, is to inspire the ability to have more like a number of parties that might be convex type entities or large projects with big stake, right? Because Curve has not just convex, but also other kind of participants that are deep inside, like a Frax or something, right? And so our hope is to engender a disparate group so that you have a number of parties that maybe provide the same kinds of things that convex provides, but a little bit of a healthier ecosystem in terms of who really how governance happens. This would be the goal, but
Yeah,
unknown for now, basically.
Yeah, I think that's a very good point. The protocol in the end should be kind of the master of itself. If you have somebody taking over your governance, then
then your governance is defined by their governance, right? Like,
yeah, that's exactly that's.
Thanks, Chan. Thanks for the question. We have one more question from Twitter Spaces. Luna, um, please take it away. She's connecting. Or no, they're connecting now. By the way, Cassandra, Samsala from Sphere also asked the same questions last night when I told him that we're having this discussion today with you. So
Hello.
thanks for answering that. Hey,
Simsala from Sphere and Penrose. Let me put it this way.
Can I ask my question?
Yeah, please go ahead.
Okay. I think your partnership is very good, but I want to know, are you happy for this partnership?
of course, yes.
And can you tell us what's your plan for the next year, 1 or 2 next year, and what's your priority in your roadmap in the
Yeah.
long term?
Thanks for your question.
And this is to Arrakis or to overnight?
Actually, this for Arrakis.
Great, cool. Yep. Happy to answer that. So yeah, super happy about this integration. I think there are a few really exciting things in the pipeline. This will be a first spill, so I hope nobody's mad at me from my team here. But why not? We have a little bit of alpha. We're working on on like a V2 for our vaults that makes them a bit a number more flexible. This is really exciting. So it's still only a Uniswap V3 model vault, but with a number of new features that we've learned from, this vault was designed from before even Uniswap was out, while we were just reading the white paper. And we've some things have been really great about it, but over this whole year and a few months now, a lot of learnings. So the idea is to put our heads down and really understand what the perfect fungible wrapper around Uniswap v3 positions would be. And the main additional exciting requirement addition there is the ability to one vault can house multiple positions across even multiple fee tiers. So instead of a vault being a wrapper of a single position, it's now a wrapper of like a bundle of positions so that you can distribute the liquidity in much more interesting ways, right? Like maybe a Gaussian around the current price. And so to create this really flexible Uniswap v3 fungible primitive at the bottom, this is like very first on the future roadmap, as well as continue to develop and the path to the Spice token, which has a number of steps. Right, first thing that's coming very soon is getting everything together about exactly how the airdrop will happen and the different participants. This includes people who are gel holders being able to lock their gel. That's coming very soon, but also projects. There's a portion of airdrop which is for like partner projects, and so how exactly these partner projects will be able to figure out how to get that participation. This will be like there will be kind of a time period wherein there's an onboarding of a lot of probably new projects and everybody kind of competing to be in the top 25 in order to get this project airdrop as well. So moving ourselves towards the Spice token as quickly as we can, and working on this Vault V2. And then finally, after that, the exciting thing is to build more of these, both ourselves and with partners, these structured products on top of this Vault V2, right? So the idea is to make this the perfect primitive for anyone who wants to build composable structured products across multiple protocols, where if they want to use Uniswap v3, you probably should use one of our vaults, which allows you to immediately access all the fee tiers and everything in a nice wrapper. So yes, working towards Spice, Vault v2, and then hedged products and other structured products on top of our Vault v2.
Yeah, if I may add, I really hope we're the first project who kind of integrated Arrakis. But for us, really, the hedged products is the way forward. So what we're really working on is, and we call it USDC neutral products. So where we can help people who are interested in the USDC related yield benefit from multiple vaults at Arrakis. I think we actually today and tomorrow deploying. Actually, last week we deployed the first test strategy, not yet a full vault, but test strategy on our development stand, which is kind of delivering USDC yield on hedged ETH USDC pair. And kind of start working on that, and we'll deploy multiple others, and we'll kind of look at the financial performance. We'll look how that's performing in the stress. What happens? How close do we get to the borders? How liquidity is behaving? So is there risk of illiquidity of those positions at specific times, or like too exaggerated slippage? So these are the things which we really work on, and then we have further ideas how that can further be wrapped and made composable with some of the interesting ways to distribute that.
Guys, we need to move on with questions because there's a bunch of them. So let's do the quick Q&A, right? Let's try to spend not more than 2 minutes on each of the questions. Moving on, the question from Jay Shell from Discord: how does USD Plus plan to get users involved with their liquidity pools on Dystopia? Will they join forces with a yield optimizer like Penrose?
We are big friends with Sphere and Penrose and Dystopia team. We are actually very proud that USD Plus and USDC pool has been stable pool has been deployed on Dystopia. That is our very first stable pool. Finally, we have launched the stable coin, which is fully backed and generating yield and paying yield on a daily basis, which has actually generated yield even last week and actually was an exaggerated yield. We first launched it with on pools on QuickSwap, like ETH, USD Plus, and Matic USD Plus. We wanted to see in that volatility whether our stable coin would actually be able to keep the pack and generate yield while still in the pools. So that was actually very successful, and now we want really to push forward with stable to stable pools on Dystopia. And indeed, we are talking a lot jointly with Sphere and Penrose how that can be optimized. And actually, it will be in separate AMA session, maybe before Dystopia launches, between Sphere and ourselves on how best to profit from those pools. So stay tuned to our socials.
Yeah, awesome. Thanks, Max. Another question is from Earth, from Discord. Thanks for the AMA. Excited for the partnership. I'm wondering, what does each of the project positions itself in the partnership? What do you guys try to create together? What makes you keep going in the bear market? What keeps you believe? Oh, there's so many questions in one question. What keeps you believe in what you are doing in the bear market, especially when DeFi seems to lose its glory and receive many doubt now? And what market cap each of the project is aiming to achieve? Wow, there's a lot to take on. So yeah, who wants to start first?
I can start and just try to do some rapid fire there. I think in terms of building in the bear market for us, we think that there will be a consolidation of DeFi, but we're actually very lucky to be, on top of Uniswap V3, which I feel very confident that this isn't going anywhere. The volumes stay very impressive. They're competing with centralized exchanges. Of course, things will change a little bit, but I think if any DeFi is still going to be there, it's probably Uniswap, right? And so also in terms of how our partnership works, yeah, we ship this Uniswap V3 integration, and then projects like USD Plus can wrap that and make these more interesting hedge products and explore the new composability that we bring to Uniswap V3. And in terms of market cap, yeah, I don't know what I ought to
Sky
say
is the
there.
limit. Sky is the limit for Arrakis.
Exactly, yeah. But yeah, I think that was a few of the questions.
Yeah. For USD Plus, obviously, Arrakis is the source of yield. USD Plus is a fully stable, fully collateralized, 100% collateralized with stables, a stable coin, which is generating a paying yield. It's designed like a money market fund, and it has all the mechanics of the traditional fiat-based money market funds. And it's designed to be compliant with the upcoming regulation of stablecoins. It's so conservative, and we laugh. We have like the least risk appetite across all of the crypto. So it's so conservative. It only competes with IUSDC. And so we actually, this bear market has been great for us. We have influx of customers. Everyone is suddenly very risk averse. And we have new customers coming over to USD Plus like all the time and trying to explore the product, and they're saying us, wow, this is really low risk. You guys are really stable. You take risk consciously. And so that's what we are doing. I think what we are doing can be further taken forward, because indeed Arrakis is fantastic technology, and there is so many things which we can do. Like we are producing money market funds, essentially USD Plus money market fund, but there is this entire ETF industry. I'll tease you a little bit in the traditional world, which has not been solved by DeFi. I actually think Arrakis Plus USD Plus or Arrakis Plus can solve the ETF industry for DeFi and make it way more attractive and interesting than it has been than the previous attempts.
Off we go. Right, another one. So, we slightly touched upon that. After Terra fiasco, how do you think people will gain trust in another stable coin that isn't 100% backed with fiat? Shinra from Discord.
I think this is great for you guys to answer probably, but I would say yes, people prefer fully backed stable coins, maybe between backed by fiat. I think we've seen that DAI held up very well as well, and this is backed by crypto. So I think people there is still demand for fully collateralized stable coins. Under collateralized, of course, is extremely suspect, especially in the current climate. But but yeah, if you look at DAI, right, I think there's still a lot of trust there, even though it's backed by crypto, but over collateralized.
Yeah, I totally agree. DAI went up when Luna crashed. The price of Maker went up by 50%, and then fully collateralized are fully subscribed. So transparency is very key. Demonstrate that you are fully collateralized and decentralized. The issue with fiat-backed stable coins is centralization. There are dangers over there. And now take into account that USD Plus in our case is fully collateralized by DeFi yield generating assets linked to USDC. And so essentially, we are backed by stable coins, which are backed by fiat. So, I mean, it doesn't get any more reliable than that. Plus decentralization, which USDC doesn't have. So, just to me,
Nice.
it's no brainer. It's the best product out there.
Nice. Do you have energy for one more question? All right,
Okay.
let's do it. So Arrakis is a yield optimizer for liquidity. Is USD Plus going to have a pool on Arrakis? Also, is overnight going to sell the yield generated sell the yield generated to pay out USD Plus holders, or is going to lock the rewards token to get more governance over it? Lack TC from Discord.
Yeah, so USD Plus is not going to have it cannot be a part of Arrakis because USD Plus is a rebase token, and so we pay back people the yield in the form of the rebase. You do nothing, you just enjoy the rebase. It's like others are USDC. You just your balance grows, and that's great. Uniswap v3 does not support rebase tokens, and so there is no technical possibility for us to have a pool in Uniswap v3, and for that because of that, Arrakis will never open a vault with USD Plus. But I think Arrakis is one of the best yield sources out there, one of the most composable. Is going to be a fantastic yield source for us in unhedged and hedged strategies, which we deploy on chain. And we just enjoy what they're doing, and build great things together. And as I said, there is more to be done, in particular in the area of joint hedge products, which should be market killer.
Anything to add, Cassandra?
I think you covered it perfectly, and it seemed like more a question for USD Plus. But yeah, it makes sense. Exactly. Rebase tokens not supported on Uniswap V3. It's true.
Yeah.
Yeah. Nobody is perfect,
Well, guys, it's been a wonderful conversation. I think we can wrap it up for today. We've got a ton of engagement from our communities. And well, I really appreciate your time today. And I appreciate people who just joined us on Twitter Spaces, on Discord, and on all other platforms. We are recording this live. So whenever you want to re-listen to questions and answers, please like visit our Twitter Spaces. We'll also drop the link on this recording in our YouTube channel so that you also see our faces. And this is where transparency starts, right? You see people behind what we are doing, and these are real people who stand behind their words. And this is to the point of what we can do as an industry to kind of help with the transparency and help not get to the point which we've seen last week. So ask questions. Max is 24/7 in our chat. He's doing like two times the work our community managers and all of us are doing in answering those questions personally. So this is a wonderful opportunity. Like and in 1 month he won't have time for that, but hopefully he will. So just enjoy this moment now and ask questions, whatever you have. we're jumping to every single
Yeah,
page.
I actually saw Kassandra doing the same, and I actually started doing this because I saw Kassandra in Arrakis chart, in the LP chart, and I think that's the best. If you want to understand LP and the yields and the yield sources and stuff like that, that's actually one of the best charts. Actually, ours is probably second best, very close second best.
All right.
Thanks, guys.
Any last closing thoughts from both of you?
No, just thank you guys so much for having me. Super interesting conversation. Really enjoyed, and can't wait to keep seeing how the integrations roll out and what we can build together.
Thank you, Kassandra. We'll also look forward to that.
Thanks, everyone. Bye, guys.
Thanks. Bye.